All right, so thank you very much for coming this morning. This, as I've done the last few years, is I will put up what I said at the very end of the last year's presentation and talk about it. And what you see is some of the points that I made. And still, I think we gave a pretty reasonable expectation in most of the sectors and what was going on in the economy. I want to focus on the very last one. Last year I came up and said I thought that the Wichita economy was going to grow pretty slowly, similar to that of Kansas, and similar to that what we've been doing the last couple years, but a little bit faster. And as soon as we got into January, we actually downgraded our forecast a little bit. The last few months, we've been growing about 1% year over year. This last month, it was negative. Now, estimates have some tricky things to it, so I'm not going to worry too much this last month, but we've been growing about 1% year over year. So I want to do some explanations because I think it's very important that we have a really accurate and reliable forecast, and I want to talk about it. So the first thing is, where were we right? I think we were right in a number of things. I think we were pretty close in our construction and our manufacturing, which you might be surprised about. We were actually pretty close in all other service sectors like finance, professional services, and healthcare. I think we got them all pretty close. The question is where we were off. The first one is government. We're off on government, and the second one is retail. So why we're off on government? Well, it should be noted that we don't try to predict political decisions going forward. We actually use the state and local budgets in our forecast. So that's what we use as the baseline. So discretionary decisions there can actually alter what happens in the employment in government. The other one is retail. Now, in retail, I actually had a slide last year that I said, I thought retail employment would soften in 2015. I just didn't expect the 1,000-some jobs that actually declined in the numbers for retail the first part of this year. Now, there are estimates for this. They may be corrected, but what would I attribute to some of this? Well, I think consumers held really tight to their cash this first half of the year. Why did they do that? Partly uncertainty. Part of this uncertainty we did to ourselves across the state, and the other part is this slow growth. So I think consumers held their cash a little bit, and that might have affected some of that employment. But still, overall, I think we got most of the expectations right. Now, I will say, when it comes in February, when they do a revision over the year, I think we might see some upward revisions of some of those numbers that come a little bit closer, at least to our revised forecast that we did in January. But I will tell you, we are taking it very personally, and we want to make sure that we keep it as accurate as we can going forward, and we'll reevaluate what happened in our forecast for being off, not by a lot, but still more than I was hoping to be. Oh, please go advance for the slide. All right, one more. We got to go to the next slide. All right, so this morning, I want to talk about how Kansas and Wichita is like a pickle. I actually proposed this question to Leadership Wichita, a program within the Chamber of Commerce, last month, and we had a great conversation, a real in-depth conversation about what was going on within Wichita. I want to still use this idea, but talk about it in context for what's going on in the economic market here in Kansas and Wichita. One more thing. I also used pickles because my son and daughter are actually in the audience today, the first time ever. And this happens to be one of their favorite snacks is pickles. I think it's kind of odd, but they love pickles. So I'm doing this also to keep them a little bit entertained since they've been sitting through this whole morning. Now, the first thing I have is the fried pickle paradox. Now, a paradox is, it doesn't matter, the sound reasoning would not get you to the actual conclusion. Right? Sound reasoning would not get you the actual conclusion. So when you look at the U.S. economy, it started growing. Recently, we've seen employment expansion. You heard quite a bit of that in the last two speakers. Employment has been expanding. Then you go back to wages. Wages have been expanding, but not nearly where we would expect them to be. That's the paradox. So what's going on within wages? Well, here's what's going on. Firms are hiring higher technical skilled people at higher wages and lower skilled people at lower wages. This is a value-added labor component, right? Firms are using surgical precision when they're hiring, not broad-based hiring. And because of that, they're staying in the driver's seat. They're controlling the wages that's going forward. Now, I think this relationship is also accentuated here in Kansas and Wichita, partly because we have a lot more technology and capital equipment that have been placed in this state because of manufacturing, but also because we have such a slow growth economy that firms can be pretty meticulous when they're hiring. So I think we have some things going on within wages that's making our growth not as broad-based as we might otherwise want. So now the U.S. economy, as they talked about, it's been growing. It's humming along. It's doing as you might expect, probably as good as this is going to get during this economic cycle. This is probably as best as we're going to get. So how are we like a fried pickle? Well, I would imagine if we asked everyone, 99% of you would love the outside of a fried pickle, something you might have eaten at the fair last month. The problem is not everyone in this room is going to actually like the pickle on the inside. Not everyone in here is going to like the soft wage growth that we had. Next slide. So here, we're going to talk about, this is the aggregate view of the Wichita economy, the broadest definition for what income looks like. And the first slice of this pie I'm going to talk about is personal transfers receipts. This is payments from the government to people. This includes veterans pay. It includes unemployment insurance. It includes medical, a conversation we've been talking quite a bit about in this state. Now, this is only 16%, and I know this crowd pretty well. I know you probably want to know how we compare to the U.S. The U.S. is actually pretty high, is a lot higher at 17.3%, which means there are states even higher than that as a percentage of the overall income. The next slice is dividends. There's an interesting story there, so I'm going to save that for later. And the third slice is the earnings, which is going to be broken off to the right side. So here's earnings. The top one is proprietor's income. That one also has a pretty interesting story. That's business income, so I'm going to come back to that. Then you have supplements. That's insurance and pensions. And finally, when I said income, this is what your mind is really thinking about, the wages and salaries. This is the compensation for the work actually performed. Go ahead and go to the next slide. So here, I'm switching the view. Before it was the aggregate view. Now this is the percentage change in the annual average wage over time from 2008 to 2014. How do you read this? Well, at the U.S. level, what happened is the percent changed increased about 13% over this time period. Now, Kansas was slower at 12%. If you divide that out, that's just over about a 2% increase per year. Advance the slide. And here's Wichita. Closer to 8% during this period of time. Before you really draw jobs because of what happened in wages here, there's some more explanation to go on this. Go ahead and advance the slide. What we're adding in is inflation. That's the invisible force that erodes a lot of our happiness here. And if you look above the shaded area, that means there was a real increase in wages. Below that means there was a real decrease in wages. So for Kansas, there was a 2% real increase in wages over this time period. For Wichita, there was a 2% real decrease in wages over this time period. Right? There's a loss in purchasing power because of that. Now, the Bureau of Labor Statistics analyzed what wages by income groups, by occupations over the last few years, and what they showed is the only income groups that had a real increase in wage was the top 20% of the U.S. That means the 80% of the United States did not have a real increase in wage. Now, what's the problem? The other speakers even talked about consumption. The United States is a consumption-driven economy. Right? We need a broader-based employment growth to have broader wage growth before we have even more consumption. So although we've been growing in jobs now, and we're doing pretty well, the reason why it's not even stronger is because of the consumption side and in employment. So go ahead and advance the slide. All right, what kind of pickle is Wichita? Well, are we entrepreneurial like grandma's recipe? And I personally like those homemade pickles that you can get at the farmer's market. Are we creative like a Kool-Aid pickle? By the way, that is very common in the Deep South. You should try it sometime. Are we common like a dill pickle? Something you get in any grocery store that you might go down. And now here's the question. So when I came back to Kansas in 2009, the community doted over the fact that they're very entrepreneurial, a special pickle, if you would say. But the problem is, and we've reported numerous times on our website, and you can see it still there, that we are not as entrepreneurial as we think when you look at patents and you look at self-employed. But I want to give this a little bit broader context because of the conversation that's been brought up. If you look at the index of entrepreneurism over time for the United States and Kansas, it's actually been going down for both groups. The only problem is this. The Kaufman Index actually showed an increase in entrepreneurism at the U.S. level because of people going self-employed. Kansas actually dropped in 2014. So now, if you advance the slide, I'm going to go back to the conversation about income and bring those two other components back to it. Go ahead and advance the slide twice so we can keep on talk with this conversation. The first, on the left side, is dividends, interest, and rent. This includes income from rent, natural resources. It includes royalties from patents, and it includes copyrights. It has an element of that entrepreneurism into this. And when you look at this over time, what you see is that you see the United States growing a little bit faster. You see Kansas having a bump up in 2012. We know what that is. That's from western Kansas because of land and what happened in oil, and it came back down. But consistently, you've seen pretty much a 5 percentage point less growth in Kansas and Wichita than that of the US. So now switch your eyes to the right side of the screen where you look at proprietor's income. This includes farm and non-farm. Now, farm accounts for about 13 to 17% of all this. The reason why it's not larger is because as farms go from the family-owned farm to a corporation, it gets removed from that segment. You see a lot of volatility in this, and that is because of that farm. Now, when you look over time, what happens? You see Wichita much slower than that of the nation and even of Kansas. Now, part of this is because we have a lot of small firms here that would be in the proprietor's income, and they're dependent on the growth of this economy. And we've had a very slow growth economy, but we still have one factor of income for entrepreneurs that are not being rewarded. When you look at the state side, you can see Kansas. When you take out farm income, it actually grows a little bit faster than that of the nation. That's pretty good news. That should make us feel better that there's some entrepreneurism, but I want to give you a different take on that. If you don't have as many bursts of new companies here as you're seeing at this United States level, if we're not seeing the entrepreneurism being created right now, what is the longer term expectation for proprietor's income for the state? I think there's some concern to that. That's why, as we saw just a minute ago, this Wired session, we think we should look at entrepreneurship from an economic perspective. Let's have a conversation with faculty who think about this often and with this community and have a dialogue. Now, it should be noted that they've already been working on this quite a bit already this summer. One professor has been looking at births and deaths of company from a very unique data set that will see the churn of that entrepreneurial spirit across the state and also in different industry segments. Go ahead and advance the slide. All right, now, you might have wondered that when you look at the average change in wages over time, that might not represent the whole income you take home in your household. And that's true. There are a few other variables that we should probably look at. I'm going to just highlight two of them that although Wichita looked bad, there are some other explanations that could make it why we're doing a little bit better than as negative as that slide showed. First one's hours worked. Well, when you look at hours worked in manufacturing, the United States is getting really close to that 42 hours a week, which is around its peak. Once it gets there, they usually hire more people. But what's happening at the US level, because there's been weaker wages there, the people are staying pretty close to that 42 hours a week because they get more take-home pay at the end of the period, right? Now in Wichita, we are coming back up to our 45-hour week period, right? It's not near our peak. Our peak was actually 50 hours a week, which is pretty high, right? So what's happening in Wichita? We have lower wages that are a little bit softer. They're working more hours, and they break it more home by doing that, working more hours. Then you have more than one job. You heard over the summer that people had in Kansas, we had a higher percentage of people working more than one job. So I'm not too concerned over the idea of people working more than one job. There is connections within industries and structures that have happened over time that have become complements. Think about the farmer. The farmer used to support their own family just from farm income. And today it has changed, right? The farmer now they supplement their income. They get some of the reduced financial risk by having a second job. So I'm not completely concerned that Kansas has more than one job. But when you look at this from a perspective, right? This could mean the household could be bringing more income home because they have more than one job. The other survey just looks at the firm side of this. Go ahead and advance the slide. All right, are we in a pickle? Is Kansas and Wichita in a proverbial glass jar and we're stuck and can't get out? Now I think can't is a little bit of a strong word, but the imagery might resonate with some of you. Go ahead and advance the slide. All right, so keeping in this line of looking at wages and the overall labor market, what we did is took the US growth rates and subtracted it out of Wichita. So you get a relative impact or relative perspective of what's going in the market. Anything under that black line means there's a negative relative market. Anything above it is a relative positive. So here's what's happening. You look at employment. Employment was growing slower than that of the US. We already knew that. And because of that slower growth in employment, we had weaker wages over this period. Go ahead and advance the slide. This next one you see is manufacturing. You already understand that manufacturing is clearly a lot slower than the US for this period of time. But what you do see is that in 2011, wages actually are a little higher. What happened here? Here's one of the reasons. We've had a lot more injection in equipment and technology here in Kansas because of the manufacturing and aerospace that we have. And what has that done? Firms were very meticulous in hiring and surgical in hiring higher skilled people. We're talking about machinery and engineers that were going into this. That was driving it up. It's not because of tightening of the labor supply. It's because they were being very specific, trying to find the right skills for the equipment that they needed. Other than that, it's been a pretty weak environment. Go ahead and advance the slide. I wanted to put one in here that has been the stronger growth sector for the Wichita area, and that's professional services. And when you look at professional services, although it was expanding, when you compare it relative to the US, it wasn't as strong until 2013 and 2014. What happened then? Well, this is management of companies. We have to be very thankful to companies like Coke and Freddy's who've been expanding, who've been more entrepreneurial lately and giving more opportunity. The question is, what's going on the income side? Well, here is the one segment where you see a little bit of tightening in one segment of the labor market. This is in the finance and accounting and management. But I think it's less than it's a tightening of the labor market. I think there's more of a shortage of labor market in this sector. I don't think we have enough people willing to move here, although the demand was there for this. We also don't have enough millennials who are getting degrees in business to actually fulfill the demand going forward. If you look at this over time, it's improving, not as fast until just recently, and the wage improved quite a bit, but how long can we sustain this without a labor supply to actually fuel one segment of the economy that has been growing? Go ahead and advance the slide. All right, let's talk about the business environment. This is the 7th year that we've had a survey of our Way Out team. It's given us insights on what's going on in the economy in general and perspective. So go ahead and advance the slide. The first one is going to look at the concerns that they had. There are 5 issues here. And what they did is they ranked them by that. And the top one, again, for a 3rd year in a row, is U.S. competitive position. So what does this mean? The businesses are very concerned about the relative cost of the dollar because it's shutting down some of our export market. They were concerned about regulations. They're concerned about policies. A couple firms came and talked to me, and we had a discussion about what's going on. And they said that they're just now thinking about moving some production from Kansas and the United States to other countries. And I found that a little surprising at first, that they're just now thinking about that. But as I thought about it in more detail, here's what's happening. 15 years ago, firms were wanting to go to other countries because of the lower cost of labor. The last few years, they've been thinking about going to other countries because they needed access to those markets. And today, they're much more concerned about the relative cost of the dollar. They're concerned about policies and regulations that are hurting them. Right? This is a shift in what's going on. You add all those together, and these firms are feeling really crunched here in Wichita and across the state. So what's going on? Well, we are a state, our state is a manufacturing state. This is an important issue, but the companies here are very concerned about their competitiveness, not only from the invisible force, the market force, some of the prices, but also from the political forces that are behind there. And they're concerned, and they're still considering about not doing the next production here, about going somewhere else. China. Well, we heard a little bit about China, but let me give you another perspective. Moody's says a 1% decline in the China's GDP would only have a 0.2% decline in our GDP in the United States. Well, when you look at this, the U.S. has about 7% of its exports from the nation to China. If you look at Kansas, we have about 10% of our exports to China. And our top commodity that we send to China is grains. The next one is processed foods. So agriculture has the highest risk in Kansas to a slowing economy in China. When you look at aerospace, of overall aerospace exports from Kansas, only 4% is that to China. So we have less risk there. It's more into the agriculture side. Go ahead and switch to the next one. We asked the question also your concerns at the national level. Now, when we have it ranked, the top one was long-term unemployment. But when you look at the dispersion of answers, they actually didn't agree on what was the top one. It's probably more the way we worded the potential answers, so I'm not going to worry too much about the ranking here. I will bring up the federal debt. So under the federal debt, because we come to a potential shutdown, which happened several times this time of year, the federal debt actually decreased $59 billion this last year and is expected to decrease the next 2 years. The problem is this. According to the existing obligations and interest, it's likely to go up in 2018 and continue to go up. So when we talk to the businesses here, they can remain very concerned about the policies going to the increasing our debt ceiling and also the policies that might handle this. This remains something out there that's looming that businesses would like to have dealt with sooner than later. Go ahead and advance the slide. The next one we're going to go to is the state. And when you look at the top concern for the state, it was the slow growth economy. I talked quite a bit about that last year when I said what's going on in the momentum and how faster economies get more investment and how slower economies get more of that stagnant cost where it's very difficult to pay off some of the cost structures they have. An issue that we have here, and I won't go in much more detail on that. Go on to the next one. This year we broke out from this a local perspective. Now local for this morning means the Wichita area. And the top concern was, again, this employment growth, or really slow employment growth is the biggest concern amongst businesses here. The next one is industry diversity. When we talk about industry diversity, when you think about it first, I think, yes, it's an important issue because if we were more diverse, it would reduce some of the risk. However, we've got to think a little bit more detail about who we are. If you think about this, a pickle is just a cucumber soaked in vinegar. Right? We can't go and start pickling pig's feet when all we have is cucumbers in the storehouse. We've got to think about industry diversity a little bit differently. This community's thought about how we could be more diverse from a top-down approach. How do we bring industry in? We've thought about industry diversity as a state and locally from the bottom up. How do we have the right environment from taxes, from an innovation campus? But we also need to think about industry diversity and what needs to happen to make this from the very core of this. That's the people and the businesses. When are they going to start really thinking about how do I create a new product differently? How do I add a new spice to that pickle? How do I package it differently? How do I find a new market? That's the group that really needs to get the fire underneath it to go forward. When you look at what's happened for innovation and entrepreneurship over time, we'd have other innovations that spurred off innovations after this. There are other communities that at some point they get at the brink of destruction or they get at a point where it's so bad that people have to survive. And that might be the point we were at in this community where we don't have something to fuel this from that very low, from where we're at, but maybe we can grow because we're going to have more of a fire in us. We're going to need to come out from under where we're at and start growing. And that's the perspective that we might need to start thinking about going forward. Go ahead and advance the slide. All right, so let me change this to the existing conditions and what's going on financially within the companies. 20% of the firms said that there was really low increases of input costs, which is what we would expect in this environment right now. And then you look at the right side, it actually says that 25% had increased prices to their customers. Well, that is a difference than we've seen the last few years. The last few years I've talked about companies being financially pinched. What we're seeing now is companies are seeing a lot more opportunity because they're charging a lot more. Not shown on this slide is volume demanded. We had a higher percentage of firms saying volume demanded increased this last year. We also had a higher percent that said that revenues, profits increased this last year. So the optimism is improving within firms. Go ahead and go to the next slide. So what's their future expectations? When you look at the future expectations, again, we see about 20% of them saying that they expect input costs to go up around 20% said input costs would go up. That's in line with a lot of economists' thinking. When you look at prices charged into the future, or prices charged to the consumer, we see that 35% of the firms expect to increase prices. This is a different perspective than it has been in the past. In the past, we talked about consumers being financially sensitive, price sensitive. Right, what we're seeing here is firms think they can increase prices and there's more opportunity around the corner. Now, where is this coming from? This is not necessarily all here. There's also some opportunities that they see across the United States, which is much stronger, and some opportunities in the global economy. Go ahead, next slide. All right, employment. So how does this translate over? So we have 40% said that they would increase employment over the next 6 months. That's pretty optimistic. Not really the broad-based growth that we were wanting, but it's still a sign of growing. You see, 15% said that they might decline employment of this next year. Most of those said this would be through attrition, not any really mass layoffs. Probably a lot of that is an aging workforce that's getting ready to retire, and they're going to just absorb it. It actually might help with some of the cost structure within firms locally. And then you look on the right side, 30% said that they would increase the wages. Well, this is not that broad growth, but we're seeing growth in general for employment and expectation of growth for employment or wages. All right, so now I've talked quite a bit about investments over the last few years. So let me give you a perspective. In 2009 and 2010, when we talked about investments, that means we were going to go put more equipment and capital to replace labor. The last few years when we talked about investments, it was very incremental and very strategic. We were matching the demand exactly what it needed. We didn't want to overinvest in anything. I think it's different today. I think with this little bit of optimism, when you look over the next few months, I think businesses are going to be willing to take a little bit more risk. They're going to be thinking about new markets. They're going to think of new products they can take to market. The problem is this. This goes back to that slow growth market that we have here. How much of that is going to be within Wichita? How much of that's going to be in Kansas? Probably more. And how much of that investment might be outside of this market? That's my only concern with that. I think they're really ready to make investments. They have the cash. They want to do it. I think they're going to take more risk, but I'm not sure all of it's going to be here. Go to the next slide. All right, the outlook. Moody's says that the U.S. economy will grow about 2.1% in 2015, and they expect the U.S. economy to grow about 2% over the next year. Our forecast for the Kansas economy is not nearly that. We show a slow growth over the next year, 1.4%. This is similar to what it's been doing the last few years, not really an acceleration of it. For within the state, we think Kansas City might be close to that, a little bit faster. Topeka and Wichita will be slower, close to 1%, but for two very different reasons. Go ahead and go to the next slide. Let me go through two drivers and go ahead and go to the next slide so I don't keep saying it. We have two drivers here. The first one is shipments. This is general aviation. General aviation shipments went up in 2014, but the first half of 2015, not shown on here, actually dropped, both in pistons and jets. Now, when you looked, what Gamma said was this is because of that global market. Global market was really influencing the business jet market. And however, most analysts, and when you think about the general aviation, is saying there's already been structural changes within this industry, that there are new products here, and there's some opportunities still within this segment. When you go to oil, we've already talked about the price of oil. Price of oil is affecting the production. We're down about 7% over the previous year. Then we asked our Outlook team and some other analysts some questions about this, and they gave us 3 points to think. The first one is the longer that the oil prices stay low, the more costly it might be to bring production back up in Kansas. The second thing is there are longer-term contracts in this market that are 6 months and 12 months. So we might not completely have realized the full cost and the implications of a low environment. There might be some other costs that are out there that will be impacting us. You got to think about that. Our economy is aligned with oil across the state. There are a lot of structures here, not just the small employment in the sector, but there are other machining and other sectors that support it. So there might be some other costs looming out there that we don't fully realize is going on there in a low-cost environment. The third thing is this. There's a fundamental expectation here. Fundamental is that this is a limited resource, and eventually the price will go up. I don't know when it will go up, but it will go up. The question is, it was volatile before. How volatile will it be going forward? Right? And if you look at the cost structure here, which is a little bit more expensive in this market, if you look at the size of our labor to respond to price changes, how sophisticated are we in Kansas? How are we going to be able to match that market as it goes forward? The market will come back. The question is, how are we going to be able to interact with this? Will we lose some more of our energy status when the prices do come back up? Next slide. All right, so for our forecasts by industry, we're not that optimistic clearly on the natural resources and mining right now. There's not a lot of jobs in that anyway. But when you go over to construction, it's been growing and it continues to grow. We're getting close to the 2008 peak that we had before, but it's a very different perspective. It's not because construction is all here in Wichita. It's because there's been some pulling together of construction companies, and they're serving a much larger market, not only for here in Wichita, but I also see that in Kansas City. When you go back to durable goods, let me go to aerospace, but take it a broader view, the aerospace and defense. If you look at revenues actually went down in 2014, according to Deloitte, but profit margins went up. Why did profit margins go up? They went up because of efficiencies. Efficiencies, use of labor. Unlike productivity in manufacturing at the U.S. level, which has been increasing at a slow amounts, productivity in aerospace has been increasing by a lot. Right? They're using labor significantly different, much more efficient, which is making them more profitable. The other thing that Deloitte said is that there's also an improvement in the supply chain. The supply chain was very complex, had a lot of improvements, and they get in those efficiencies. It's showing signs that this aerospace is in a very different position than it was before, but what is behind it? They depend on a stronger global economy. Next slide. All right, what's our expectations for wages and retail sales? So I think the Kansas market is going to continue to improve. That market's going to have a little bit of a tightening there. It's going to put some upward pressure on wages. The way we show this shift, this is not per person, this is the aggregate wages moving up. So when you include the increase in employment, this is not really that strong of a growth in wages. But we do show some growth in retail sales, but not really strong at 1.1%. As you can tell, since we have a slower expectation for Wichita, we have a slower expectation for retail sales here. Going to go to the next slide. All right, when you come here, clearly our retail expectation is pretty low. We only expect it to grow by 0.8% in employment, but it should be noted that consumers can spend out of savings, which they have more of it since they've been saving lately, or they can spend out of future earnings. And so employment could go up a little higher. On the transportation side, both truck and warehousing continues to have a 4-year strong growth. They continue to grow because of the consumption of the national economy, not necessarily here. When you look at utilities, it's much more mixed. Some are growing and some are declining because of the price of energy and changing preferences. Go to the next slide. All right, professional services has been the strength of this regional economy. And within professional services, we see management of companies, outsourcing, and this last year, we saw call centers increase as an industry, but you also see call centers increasing within existing companies, especially if they're serving the national market that are expanding. When you look at education and healthcare, we don't expect education to really grow, it's really healthcare. But healthcare is growing for some different reasons. You got to think about what's going on. It's not just an aging population that's driving it, but we also have the consumption and the income behind that aging population. They're wanting home health aides. They're wanting other products and services that are in that market. So they're demanding some of that stuff that's going on. When you look at the competition in hospitals, had some concern in some of the smaller rural markets, but I think we might need to start turning our minds to the bigger markets in Topeka and Wichita. The competition, how they compete with each other, has been changing. If you look at it, they've actually been competing on property. They've been competing on talent. They've been trying to figure out what's the right size, as government is a larger payer within it. Although I'm not so sure we're going to see that play out this next year because we have our own conversation about healthcare. I think in the next year after, we're going to come back and see hospitals in our larger markets. Something's going to probably happen going forward. And I'm not sure that's necessarily beneficial to us in the long run. Financial services actually grew pretty strong in 2014, so our forecast is a weak growth because we expect that they're waiting for the overall economy to catch up to what was already happening. Go to the next slide. All right, government. Well, we already said in our government forecast, what we do is we include the budget for the state and local governments in there. So our expectation is a flat growth over this next year, but discretionary decisions can easily influence this one. Go to the next slide. Okay, go ahead and flip all the way through so I don't have to go one by one. All right, the first one is real average wages. I've been talking quite a bit this morning about what happens in income, what happens in wages, And really, we don't have a huge expectation for real increases, but we think there will be some across the state. Not a lot here in Wichita because of the softer market. Will they consume? They could consume more because they have some of that savings and some of that pent-up demand, but I'm not going to have a lot of expectations because we also have a lot of uncertainties that might be coming across the state over this next year. If you look at optimism, I think businesses are much more optimistic than they have been in quite a while. I think that optimism might go over in taking more risks. Those risks might not be here in Wichita, they might be across the state, and they might be in other places. When you look at the global market, well, they already heard the global market is not as strong as we'd want it to be. The global marketplace is not really where we need for Kansas, specifically aerospace, but there are other sectors within the state that depends on a stronger global market. And so I put this as a headwind, as a concern for what's going to go on for this next year. The next one is this oil. Oil, although it's not a big part of our overall economy, I still put a lot of concern to it. I'm not so sure we have a full understanding there and what will happen. What are the implications to some of the machinery sectors, some of the other support sectors there that are behind the oil industry. So I put that out there as a concern going forward. And what is our overall expectation? We think the Wichita economy will grow, or the Kansas economy will grow by 1.4%. Now, again, this is similar to what we've been growing the last few years. This is not acceleration. This is just a slow growth economy. I don't have high expectations because of some of the other fundamental factors behind that. Wichita we have growing at even a little bit slower growth, only 1.1%. Thank you very much.